Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is December 9th, 2012. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's look at current market trend and our strategy. US stock market is in a rally phase. However, Nasdaq has run into resistance. What to do in this market? First of all, stay away from stocks that show trouble signs in their charts. And control the position size is also very important. In this market condition, it's not appropriate uh, to have a very large position in long stocks. A small position is suitable because a lot of stocks are very volatile. Let's look at the US stock indexes. First of all, let's look at the NASDAQ index daily chart. NASDAQ has rallied near 50-day moving average and hit the resistance and drop down. So right now it's very dangerous for Nasdaq because 50-day moving average is about to cross down 200-day moving average. If it does so, that would be a death cross. It's very bearish for the Nasdaq index. SP 500 index is a little stronger than Nasdaq, and it stays near 50-day moving average and it stays above 200-day moving average. Gold index. Gold is stuck between 50-day and 200-day moving average, and right now it's in a consolidation phase. Silver index. Silver is also in consolidation phase. US dollar. US dollar is right now in a consolidation phase as well. It was dropped down a lot and rebound and then pull back and then rebound a little bit. I'd like to share with you the charts of some of the stocks of the formal leaders, such as Apple, Google, and Chipito Mexico Grill. Let's take a look at the Apple chart. Apple is in a very bearish chart. It fell below 200-day moving average, rally near 200-day moving average, but cannot break above and pull down again, just break down again. So 200-day moving average is a resistance for Apple right now. And look at 50-day moving average, the yellow line. It's crossing below 200-day moving average. It's forming a death cross. That is very bearish for this stock. And look at Apple's weekly chart. This is starting from this is 2009 when the market bottomed out from the bear market phase, and Apple was leading the market going up. Most of the time, it's above 250-day moving average, which is also 10-week moving average. It's a purple line here, and when they uh, correct, it hits the yellow line, which is a 40-week moving average or 200-day moving average. So every time when it corrects, it hits 200-day moving average and rebound. And then to now, it's about 4 years. For 4 years, Apple had been stayed above 200-day moving average. And just recently, this is the first time in 4 years, Apple fell below 200-day moving average. And now 200-day moving average is its resistance line. So this is the first time. So that's very important sign. It indicates that Apple has changed its trend. Is now in its own bear market. Apple in its own private bear market right now. So this is a stock, and probably it's a good idea to stay away. Look at Google. This is also a previous market leader. Right now, it cannot rally above 50-day moving average. It's a little bit better than Apple because it stay above 200-day moving average. However, 50-day moving average become a resistance for Google. So this is also a very bearish for Google, but not as bearish as Apple though. CMG, Chipito Mexican Grow. This is also a previous leader for the last bull market, and now it's totally breaking down. It's dead. And let's look at the weekly chart. Chipito Mexican Grow is also a going up above 200-day moving average since 2009, and middle of this year, July of this year, it fall below 200-day moving average, and the 50-day and 200-day moving average form the death cross, and it's going down. Right now, it's just following the 50-day moving average and going down. I'd like to share with you the charts of some of the current market leaders. They are the potential new leaders, and also some of the ETFs, the two Chinese ETFs, and ARM Holdings and 3D and FLT, those kind of charts. FXI, it's a ETF that is formed by 25 large Chinese companies, and FXI is in a uptrend right now, and it recently gapped up with a pretty decent volume. So this is a kind of like a handle. This you can think this as a big cup, and this is like a handle. So this is in an uptrend. TAO is a Chinese real estate ETF, and it's in the uptrend as well. This is a weekly chart. Look at the daily chart, and it gapped up recently, and then it's going up, continue go up. Right now it's extended. There's no buy point, but it's worth to watch it. AMT is a wireless tower. They own the wireless tower. It's in the uptrend. ARM Holdings, I shared with you last week. ARM Holdings broke out. This is a weekly chart. It broke out from the 2-year flat base, and right now it's in uptrend. Daily chart, that's how it broke out with a pretty good high volume and stay above right now. It has a very like a last 3 days, it had a pullback. It's now below 10-day moving average. It worth to watch here. If you own this, and this might be an area you may want to take a partial profit. If it fall below 20-day moving average, that would be a stopping price. Costco is in the uptrend. 3D Systems, it's in the uptrend, but this stock is really hard to trade because every time it broke out, it seems pull back pretty hard. And on the other hand, the 50-day moving average, and every time it fall below 50-day moving average and rebound, that would be a better buy point than the breakout point. DSW in the uptrend. eBay in the uptrend. Facebook become an interesting stock. It seems finished the double bottom or flat base, whatever you will call it, and the break out, and the seems going up right now. So this is an interesting stock to watch. FLT, and it's in a very decent uptrend. GILD is a pharmaceutical company, also in the uptrend. Home Depot in the uptrend. HDB, this is an Indian bank, is in uptrend. Lululemon is about to break out a double bottom. Here, the breakout point will be 33.8. MasterCard, it broke out and then pulled back. Qihu, Qihu, this is a Chinese internet search engine company, and it's very volatile. It broke out here and then pulled back pretty hard. Regeneron Pharmaceutical, REGN, is also in uptrend. Sofun, SFUN, a breakout, and it ran up a lot. It's in uptrend. SSYS, this is another 3D system, a 3D printing company, and it's in uptrend. It broke out and pulled down pull back, and then almost hit 50-day moving average and rebound. So the two stocks both have a characteristic. The breakout is very difficult to buy because as soon as you buy on the breakout, it pull back pretty hard. On the other hand, a rebound from a 50-day moving average, that was a better buy point. ULTA, it's in a cosmetic and it's in uptrend. Visa is a much stronger stock than MasterCard. It's right now in uptrend. VAL in uptrend. VRX uptrend. WPI is a generic drug company. It's also in the uptrend. It hasn't broke out yet. Yahoo broke out from a multi-year flat base right here with a very high volume, and since then it's keep going up. All right, that's all for this week. See you next week.